we are going to need to have credible inflation targeting regime and flexible exchange rate. When I just returned from the annual Investor Roadshow, talking to institutional investors who own billions of dollars of Jamaican bonds across many cities in the United States, as well as investors in Europe, and all of them are very impressed at what Jamaica has managed to achieve over the past 6 years. And indeed, they look forward to the day that they can potentially lend to us in our own currency. But again, that will not happen if we do not have a flexible exchange rate. You'll never lend to one of the countries I mentioned earlier where you can't guarantee at any point in time that you can get in and get out. Right? But if we have a flexible exchange rate regime and a credible inflation targeting framework, then our ability to borrow in our own currency internationally will be greatly enhanced. And I put it to you that provided that Jamaica maintains on the path that we are on, that we pursue and obtain central bank independence with a credible inflation targeting framework and a flexible exchange rate, within the next 5 years, Jamaica will be able to borrow on the international market in Jamaican dollars. I mean, you obviously don't understand the significance of that. When that can happen, the risk to the Jamaican economy will be greatly reduced because we don't have to just depend on our local institutions for lending to us in Jamaican. We could borrow Jamaican overseas. And it would allow us to, over time, change the composition of our debt, which leaves us less susceptible to exogenous forces that can affect an economy. So that is the strategic intent. We don't pursue things without a long-term strategy. And the long-term strategy is to be able to diversify our sources of funding and to have the domestic institutional credibility that we can borrow in our own currency. Now, getting there from where we have been is not a walk in the park. Jamaica has operated some kind of flexible exchange rate over a long period of time, but the companion measures have never really been in place. We've been plagued by macroeconomic instability, and the exchange rate was just a reflection of that. And as a result, we have been conditioned to seeing movements of the currency as being related to economic instability. Today, we are in a completely different paradigm with entrenched low and stable inflation over several years, with continuous economic growth over 17 quarters, the lowest unemployment rate ever in Jamaica, the highest reserves that we have had in Jamaica's history, and reserves that have been measured to be adequate for the size of the economy that we have. So our exchange rate movements today reflect the changes in demand and supply over the course of the year. When you look at the overall statistics, Jamaica is pulling in foreign direct investment of about 5% of GDP on an annual basis over the past 3 years. And our current account deficit has been about 3% of GDP on an annual basis over the past 3 years. That leaves a very healthy excess. But that excess doesn't come in a uniform way over the course of 12 months. It can come in lumpy periods. Also, businesses, as they make plans and they execute plans, they do so not uniformly throughout the year, but they do so, again, in a lumpy fashion. So you can have temporary imbalances during the course of a year, and that can lead to the exchange rate moving in one direction or another. Now, operating in such a market where we have a market-determined foreign exchange rate requires businesses and financial institutions to evolve to be able to exist in such a market. There are many businesses today who operate and have operated for decades in sections of the economy that are exposed to markets, and they have had no ability to ask that those markets be fixed. So those, for example, who operate businesses that depend on the price of wheat or the price of soya beans or the price of corn. Think of your broilers and your big your flour mills and so forth. And those who are heavily dependent on the price of HFO, for example. Those markets have moved and have been market determined for the past 3 or 4 decades. Those businesses have had to evolve in Jamaica, being exposed to such markets, and have had to develop practices that allow them to deal with the vagaries of the market. Though the parallel is not exact, one can draw from that experience that we will need the same kind of adaptation to a market-based exchange rate on the part of the business community and the financial sector in Jamaica. And hence this symposium, which I hope will be the first of a series of public education sessions that will allow this evolution to take place as smoothly as possible. So thanks to the BOJ and to the communication team at the Ministry of Finance, and I wish for you a very productive and informative session. And as I say, if we do this successfully, within 5 years, Jamaica will be able to issue its first Jamaican dollar bond in the international capital markets. Thank you very much.
Certainly, we're moving. In the next 5 years, it's anticipated that Jamaica will be able to issue its first bond in our own currency. I mean, that's just awesome. I mean, we can do this because these are, what's the buzz? Exciting times. I now call to the podium Dr. Constant Inguna. I also call Mrs. Kalila Reynolds. And I also call Dr. Christine Clark. Our first session, ladies and gentlemen, will be on the exchange rate regimes and nominal anchors. I will now hand over to Dr. Clark as she facilitates this session. Please, a round of applause for our panelists.
Hey, you can sit here. Hi, Kalila. Nice to meet you. Good morning, ladies and gentlemen. Thank you for that welcome for our panelists. I will not be giving you a long bio as is usually done. We all know Dr. Constant Longkeng. He is the IMF's resident representative here in Jamaica, has been with us for a while, and before him, there was one also. We have also Mrs. Kalila Reynolds. She'll be here giving us, from the media's view, what has been the population's response, what's their views about what has been happening in our foreign exchange market. And I'm from the Department of Economics at UMONA. I'm also a board member here at the bank. I'll just give you a few remarks. What we are looking at here today, as the minister has pointed out, is what is best for the Bank of Jamaica to do. There are many things we could try to do, but what is the best thing? What's the most effective thing to ensure and support long-run economic growth, long-run economic activity, and to provide the stability that ordinary citizens need in order to build investment and wealth and to manage their own affairs. We're looking at how can we best preserve the currency, savings, and investment. And here today we are to discuss these issues because one of the challenges we have is while we might know the answers, the population needs to understand what exactly it is we're doing so that the signals that are sent are properly interpreted and therefore policy decisions can be more effective and efficacious. So our session, the first one, will look at, as you can see, exchange rate regimes, the issue of, is this what we should be doing or should we be doing something else that we've heard of or seen done elsewhere? And I'm going to turn over to the speakers, each of whom will have about 15 minutes to make their presentations. I'll try and do a wrap-up, a quick pulling together before opening the floor to you for questions at about 10:30. So I'm going to turn over to Constant and ask him to come and make his presentation. I have it here for you. Yes.
Okay, good. Good morning, oh, that's loud. Good morning, everybody. I'm very glad to be here. Very exciting topic, which I believe in and of itself reflect how far Jamaica has come. Minister Clark mentioned some of the achievements, and we wouldn't be having this discussion 6 or 10 years ago. So having this is reflect how far Jamaica has come. I don't know if you're able to see the slide, but the picture on the side is a picture from Sumfest Festival. And this speaks loud to what Minister Clark has just mentioned in terms of communication, how far Jamaica has gone in bringing the Jamaican people on board on what is the so-called inflation targeting framework. And, you know, it reads, stable inflation is the way to go. And it was, you know, being projected on the screen during the Sumfest Festival. We will have assisted the Bank of Jamaica in designing a communication strategy, but none of this was part of our discussions. And this speaks loud to the having a homegrown program, something that is designed by Jamaicans and for Jamaicans. We from the IMF, we wouldn't have thought about merging reggae with inflation targeting. And, you know, this has created so much traction around the world to the point where people were saying that the Fed should learn to communicate the way the Bank of Jamaica does. Can you just, you know, can you portray that? So really first, I would like to put in context what's going on now, you know, the shift to inflation targeting. Mr. Clark mentioned some of the key features, and essentially I would just be putting some numbers on what he said. We didn't consult before, but yet the presentation is actually very tied to many of the points that he made. So after this context, I will walk through what economists think of as nominal anchors, because you have to choose. Are you targeting your exchange rate? Are you targeting some form of monetary aggregate money supply, how much money you pump in the economy? Or are you targeting inflation, which is what people actually see, and this is what people actually feel? And I will explain why countries have moved towards inflation targeting as a modern monetary policy framework. And then obviously we look at some implications for Jamaica. And obviously what does a flexible exchange rate mean for the Jamaican people? Now, the first very simple, crude monetary policy framework is for the central bank to just say, okay, I will increase money supply by 2%. Think about how much money the central bank is going to print. And when you think about it, it's very simple, right? Non-sophisticated, you can observe very quickly, the public can observe what the money supply is, and every month is an information that is readily available. But the problem with this framework is that it assumes that there is a stable relationship between money, demand, and inflation, which is not always the case. You got to think about how, you know, the means of transaction have changed. Just look at the case of Jamaica, where non-financial institutions have grown. So if you were targeting a narrow monetary aggregate, you will be completely off. when you have those transformations happening in the economy. So for Jamaica, it's certainly not the way to go, the fact that it relies on such a stable relationship. Now, countries could also choose to target an exchange rate, which has its own merit. When you target your exchange rate, when you peg your exchange rate to a strong anchor like the US dollar or the euro, you can import their low inflation. That's certainly one benefit. It's something that is easy to understand. People work exchange rate on a daily basis, so that's easy. It also provides kind of an automatic rule for the conduct of policy. Those are the pros. But in terms of cons, it's a regime that is costly to maintain. It is costly because you need a lot of reserves to be able to defend your currency, because you're essentially setting a value for the currency. And as Minister Clark said, in most cases, people have to choose between the price and the volume. Because if you're telling me, earner of foreign exchange, that you're setting a fixed price, it's not clear that I will come forward with my FX, if that's the notional price that I want for it. So you will end up having black market and people exchanging the currency at completely different rate than what you will have set. And the question for businesses is, do you want to have foreign exchange whenever you need it at a price that the market will have determined, or do you want to face situations where no one wants to supply at a fixed rate that the country will have set? So it's certainly very costly and is vulnerable to speculative attacks. The other problem is that if you're targeting the exchange, what level do you fix? And I took the fixed exchange rate as an extreme, but in between fixed and flexible, there is a whole range of regime in there. So if you're managing your rate, at which rate do you want to set it? It's very unclear. So market tend to be the best judge of what the price will be based on supply and demand conditions. Now, our favorite, inflation targeting. Inflation targeting actually target what people feel, because all the other anchors try to preserve price stability, but indirectly. Inflation targeting actually go after the goal to say, okay, I'm promising to the people that inflation is going to be 5%. You have to hold me accountable for that. The reason why inflation targeting comes with accountability is precisely because the target is very transparent. And as the minister mentioned also, the fact that Jamaica is pushing a legislation to make the central bank more independent, independence comes along with accountability. So the people are able to observe the action of the central bank and look at what the rationale the central bank provides for deviation from the target and are able to judge by themselves. Obviously, the inflation targeting doesn't rely on that relationship that I mentioned earlier between money and inflation, which is one of the drawbacks of the monetary targeting. Right. Now, there are some cons, not cons, but there are some impediments that need to be worked on when you move on inflation targeting framework. It's a more sophisticated framework. And as I was saying earlier, the fact that we're having this discussion is a testimony of how far Jamaica has come. It's a framework that requires stronger technical capacity. It's a framework that requires deeper market, and actually there is a feedback loop, because if your market are deeper, your inflation targeting also works better. And inflation targeting in and of itself will promote the deepening of capital market and money market, because people know exactly what to expect. The inflation is more predictable, and they can invest more peacefully. Now, one of the cons of the inflation targeting framework is that it's obviously a bit rigid, right? Because you will have set your inflation target, and you have to deliver on the inflation target. You could think about adjusting your target, although it's advised not to play around with the target too much, because that's essentially the anchor for decisions that households and businesses make. But the beauty is that the more credibility you earn, the more flexible is provided within that framework. Because you can always tell the consumer, I might be below the target today, but trust me, I'm going back on my way back to target. And that's why central bank communication is such a critical pillar of that framework. And this is the reason why the bank has been so active, proactive in communicating its action and communicating the deviation from the target. And people were wondering, why make a fuss about inflation falling below target? And we can go on and on maybe during the session, question and answer session. Now, there is a so-called impossible Trinity, which I want to touch on a little bit. I know Larry is a big fan of that. It essentially says that a country cannot maintain at the same time the three following: free capital mobility, free capital flow, and we all acknowledge Jamaica is a very mature economy, not at the stage of preventing capital from flowing, so that's done. So we essentially left with the two orders. So you cannot have a fixed or relatively managed. I take fixed as an extreme, but there is a whole range of regime. You cannot have a managed exchange rate and an independent monetary policy. Meaning if you, and Mr. Clark mentioned that, meaning if you are managing your exchange rate, it's very hard to have an independent monetary policy. Because I will give you a very simple example. Let's say Jamaica the central bank want to cut the interest rate, right? Because the economy is slowing or because inflation is below target. Well, if the bank is over-concerned about the exchange rate, it might not take that action because by cutting the exchange rate, interest rate, foreign assets become more attractive because I'm earning more on the US. But if you're over-upset about that, the reason why that differential, the fact that capital are free to flow, if you're concerned about your exchange rate, you might be worried that if a capital flow, your exchange rate might depreciate. And that will prevent you from cutting your interest rate to serve the purpose of your own domestic economy. So that's a simple case where being focused on the exchange rate will prevent you from stimulating your own economy. And if on the other side you're flexible to let your exchange rate adjust to market forces, you focus on the right policy for your economy. If you need to stimulate the demand to bring your inflation back on target, you do it without any worry about what's going to happen with the exchange rate. And obviously, achieve a stronger demand and bring inflation back to target. Now, maybe very quickly, just to say that countries have moved increasingly towards inflation targeting. In 2003, there were about 21 countries with inflation targeting framework. And in 2017, that number grew to 40 countries. Now, one of the very important features of inflation targeting is that, and the minister also mentioned it, it works very well when there is a fiscal rule in place. And we have a study by some colleagues at the fund who actually showed that inflation targeting is more effective at entrenching macroeconomic stability when there is already a fiscal rule in place, which is exactly the case of Jamaica, right? The fiscal rule was adopted in previous year but strengthened in 2014. That was reform in crisis mode. So it's very important that we're now seeing the move to inflation targeting when there is no inflation crisis, right? But there is a need to entrench the low, stable, and predictable inflation environment that Jamaican people are currently living. And so about 3/4 of those countries with inflation targeting also have a fiscal rule in place. Perhaps I should check how many of them have a fiscal council in place, just to complement and mirror, what Jamaica is doing compared to other countries. Now, one thing that I want to show you, this chart, and the minister will have tweeted some time ago a version of the chart, which contrasts the exchange rate of the Jamaican dollar against the US to selected countries. And those countries are randomly picked. There is no science. I didn't go through any science in picking those countries. I know it's easy for you to see where the Jamaican dollar is because I highlighted it. I shouldn't. And I would have asked you the question where the Jamaican dollar is. Though the Jamaican dollar is that currency that is driving in the middle like a truck. You see, it's right in the middle of the crowd. It's nowhere off. And the chart is careful enough to set the exchange rate at the same base, set the same base in July last year. And this shows, so they all start at the same point, which is 100. This is like an index. And the chart shows you how the exchange rate has since moved. And you will see that the exchange rate today, this is as of yesterday, I believe. The exchange rate as of yesterday was below what, almost at the level it was in August last year. But obviously, not to oversimplify the short-term fluctuation, but those short-term fluctuations will be the result of, maybe some one-off transactions or the result of maybe information flow on the market, which will need market instrument, which I believe is the discussion in the last session. Now, this chart got a bit messed up, but it simply shows how the exchange rate has moved from a one-way bet prior to BFIXIT to now a two-way movement. I want to leave you with this chart, which I think is very powerful. It's a study that the IMF did in 2016. It looked at the pass-through of exchange rate movement to inflation. And the study is very careful at separating inflation targeting countries versus non-inflation targeting countries. And a very striking finding of the study is that under inflation targeting, where the exchange rate moves around, the pass-through to inflation is the lowest. Let me maybe just repeat. Under inflation targeting, although inflation targeting is a framework which allows the exchange rate to be flexible, the pass-through to inflation, which is when the exchange rate depreciates by 1%, how much of that translates into inflation increase? And the result is 0.1, somewhere around 0.15 for emerging market inflation targeter, and somewhere around 0.5 for non-IT countries. Very powerful, and I could maybe very quickly provide some rationale as to why that's the case. When you are on when you are on an exchange rate that is managed or on a one-way bet, when firms price their product, it's very simple. You just put a markup because the exchange rate is predictable. I know where it's going to, you can draw a line on the Jamaican exchange rate in the past before BFIXIT. So you can predict, and that's also the driver of dollarization. So firm will be able to mark up their product ex ante because they know what the exchange rate is going to be. But if your exchange rate moves two ways, it's costly to go around and mark change price all the time. There is a so-called menu cost. There is a cost, just think about price mark, going around to change. There are practical costs to doing that. So ex ante, I cannot mark up my price because I don't know where the exchange rate is going to be. So eventually, I'm almost tempted to let my price fix because the exchange rate is going to move up and down. Because if I rush in marking it up, when the exchange rate comes down, I may lose market power. And that's where I guess consumers also have a role in terms of shopping around and enforcing the pass-through to be what it should be. I will leave it there. Maybe.
You want the clicker?
Good morning, ladies and gentlemen.
Good morning.
Ooh, you all sound like you had your coffee already. You're good? You're ready? All right, well, it's nice to be here with you this morning. It's my pleasure to be invited to speak at this symposium. And I'm going to admit, when I was first approached about presenting today, I was like, me? No, I'm no economist. I'm not trained in this area. It's not my area of expertise. And they told me the topic was exchange rate regimes and nominal anchors. And I said, nominal anchors, what that? Me must present on that? I think I've heard Constant talk about it before, and he explained it again this morning, but that's not my area of expertise. But then they said, no, you can give the media's perspective, the public's perspective as to where this is going. And I said, okay, I can do that. I've been covering this topic for some years now as a journalist and certainly tracking the developments over time closely, especially since the introduction of the BOJ's foreign exchange intervention and trading tool, BFIXIT, in 2017. And I do have some insights to share with you this morning about how the conversation around the exchange rate might be finally turning a corner. We're not there yet, but I'm seeing signs that we're on the way. So to tell this story, I'm actually going to go back into the recent past, between 2017 and now. Remember, 2017 was when BFIXIT was introduced. And I could go back much, much further, decades in fact, but I'm not here to give you a history lesson this morning because most of you are quite familiar with where we're coming from. A dollar that we all know was stronger than the US dollar throughout most of the 70s and the traumatizing experiences with devaluation thereafter. The hawkish obsession with the dollar those experiences have caused, to the point where in the attempt to shift the nominal anchor from the dollar to inflation, the authorities are finding it extremely difficult to overcome the nation's historic PTDD. Any guesses what that means? Post-traumatic what? Post-traumatic dollar disorder. And so they've had this aggressive media campaign. You have the catchy jingles. Inflation's not the enemy. Stable, predictable. Forgive my voice. You have the reggae-themed messaging. No inflation monster shall prosper. You know that one, right? Tyrus Riley. And all of this to try to infiltrate the minds of the PTDD sufferers. But Bob Marley said it.
Thing about music when it hits you. I say one good thing about music when it hits
you, feel no pain. So perhaps the BOJ is onto something with this music therapy to try to address this psychological disorder that has caused so much pain. And say, I didn't let you suffer through my singing voice again. I'll let you have Bob for that one. Well, like I said, I want to take you through the more recent history, 2017 to now, the era of BFIXIT. So Constant showed you a version of this chart as well. And this just shows the price of US dollars to the Jamaican dollar between July 2017, and I think I did this about 2 days ago. So over the past 2 years, it's fluctuated between about $125 to now about $138 to 1 US. And as you can see, look at my little scribblings there in red, we've had 6 major peaks and valleys. So we're at peak number 6 now. And each time we've hit one of those peaks, with the exception of this last time, which I'm coming to, we've heard this public outcry. Do something about the dollar. You guys have to do something about the dollar. Oh, the BOJ needs to step in. We're losing money. Where is the finance minister? This is madness. And the voices were especially loud around this time last year and leading into August. So that third peak that you would see there, that's when you heard a lot of talk coming from the JMEA. They were on every radio program. You had the PSOJ speaking out, the opposition, of course, raising concern, and others in the public and the business sector crying out about how this hurts their business because it's now more expensive to import things, and we're an island that's so heavily import dependent, and this raises the cost of living for everyone. And the BOJs, they're saying, no, but look, inflation is low. That's what you should care about. But people with PTDD don't want to hear that. Can't talk to a man with PTDD about inflation. They can't hear that through their psychological trauma. So Dr. Clark was forced to come, I hope you like that picture. It's your official photo on the website. He's forced to come out and do some damage control and meet with business interests and the manufacturers and try to calm them down and give assurances that this is the new paradigm, that we're now in an era where the exchange rate fluctuates. It goes up it goes down. There are no guarantees. And one-way movement is in the past. But still, the central bank was called upon to intervene, and they did. They sold, I think it was about $100 million over a period of about 5 weeks in a series of flash auctions. And they also activated the sell side of BFIXIT. And eventually we started seeing the rate coming down again, and heads started to cool, at least temporarily. And I would have genuinely described the reaction from the public as panicked until those interventions took place. And then again, as recently as April of this year, which actually was during Valley number 4, so not peak number 4, Valley number 4, when the dollar was actually down, you heard PSOJ President Howard Mitchell starting to raise a cry about the dollar again. And he went as far as to call for dollarization or a fixed exchange rate, which he used interchangeably, even though they mean different things. And then I heard economist Dr. Damian King with the clap back saying, listen, do you even know what you're asking for when you propose these measures? Do you truly understand what moving to these types of regimes entail? Because you can't just talk about changing your entire system in a vacuum without talking about the supporting measures that would need to be implemented to accompany that change. And I'm going to tell you from a personal experience too, the arguments that Dr. King was making resonated with me, because I'm originally from Belize. I'm from a different country. I've lived here 11 years now. And that country has had a fixed exchange rate for as long as I've known myself. And while it sounds good to say that your dollar is 2 to 1 and your dollar is strong, what you can give up for that, and in the case of that country, is availability. So in Belize, it's hard to get US dollars. You have to jump through hoops, and I'm telling you from personal experience, I've known the exchange rate all my life to be 2 to 1, and I never thought about how the country managed to maintain that until I moved here 11 years ago and experienced a different system. Because here, I can walk into a cambio with Jamaican dollars and walk out with US dollars in just 5 minutes. Just show my ID, virtually no questions asked, and that's that. Now there, that's not quite, it's not, that's not quite the exchange rate, but anyway, you get the point. So there now, it's a whole lot different. If I need 500 US dollars for a quick trip, I have to apply to the central bank or the Ministry of Finance for permission to purchase US dollars. Then I have to show up at the bank very early in the morning and join a line as soon as they open, even before they open, to ensure that they don't run out of their very limited supply for the day, which tends to happen very quickly. And I have to wait, and then I have to present my authorization, and then I have to hope that they have the amount that I need. Or what you can do if you know somebody, you call a friend who works at the bank and tell them, put up some US for me because I need some for whatever date. And I've spoken about this on my radio show as well, because your economy has to be in a certain place to maintain a fixed exchange rate. And if we're going to be talking about different regimes, then those parts of the conversation have to be in the discussion as well. Because in Belize, although the country earns foreign exchange from things like tourism and agricultural exports, it would seem it's not enough to meet the demand for US dollars. And so they have to maintain these very strict controls on who can purchase US dollars and how much they can buy at a time. And what happens in a situation where the demand is not being met is that people turn to whatever sources they can find. The black market. And what does the black market mean? Lots of it is drug money. And I suspect it's one of the reasons that that country ended up in very serious problems a couple of years ago with correspondent banking and the de-risking crisis, when all of the large international banks decided to cut off the entire country from the rest of the financial world because the anti-money laundering concerns were simply too great. So while it's been a source of great pride for people from my country to say our exchange rate is 2 to 1, our dollar strong, what has been the cost of that? And so when somebody from home says to me, ha ha ha, you live in Jamaica, they have monopoly money, 100 and odd to 1, I can easily counter with, well, guess what? I still earn more than you do in US dollar terms. So what? And my standard of living right now is better than yours. So how exactly is that 2 to 1 benefiting you? Yeah? See, it's a perfect example. It's a perfect example of how the foreign exchange rate does not necessarily determine the strength or the weakness of an economy. And so these practical world examples need to be a part of the conversation as well, because I know it's difficult for people to understand economic concepts. Inflation just sounds so out there. Maybe we should just start saying something like the cost of goods and services rose by whatever this month, yeah? Using more practical, real-world examples in the communication strategy. And I know it's something difficult for people to understand as well because we've been tethered to that concept for so long, but I think examples like these help to get the message across. And this brings me to the present. Who knows what that number is? Huh? What is it? It was the highest. It was on Thursday last week, actually. 138.10. It's the weakest the Jamaican dollar has ever traded against the US dollar in history. And we hit that point, like I said, last week, Thursday. The previous record, the previous low was 137.96 on August 24 last year. That was peak 4 when all the voices were talking. So passing 138 was a new milestone. And in its latest swing, the dollar lost 6% of its value in 5 weeks. But there was something very unusual about this milestone, something that certainly caught my attention. Because as a journalist tracking the dollar, I've been watching to see when it would cross 138 so that I could report that it's crossed 138. And I've told the reporters in the nationwide newsroom to watch and see when it crosses 138. It's happened, and so I was expecting the usual reactions, the usual, oh my God, we've hit another record low, and the dollar is crap, and we're losing money, and intervene, and use some of the reserves because the market is too disorderly. But strangely, the usual critics were pretty quiet this time. The JMEA and the PSOJ, typically the loudest voices on this issue, they had no comment. And it's not that we didn't call them for one, because we called, and they said no comment. Oh, we called, Minister Clark can tell you, we called him too. And he gave my team an earful. He wasn't very pleased. He said, why people always call when it's bad? Why don't you call me in a few weeks when the dollar strengthens again? Well, Minister, it turns out you didn't have much to worry about because nobody was really complaining this time. Well, let me not say nobody, right? Because opposition spokesman on finance, Mark Golding, that was not shade, sorry, that's not shade. He did send out a statement about a week before it hit 138, calling for the government to respond to what he called foreign currency market woes. But that was about it. The lone voice in the wilderness, at least that I heard. I don't know if you all heard other voices on it. And in this recent history of the last 2 years, I found that rather astonishing, that the dollar hits an all-time low in trading against the US, barely any reaction, moving on, next story. And it says to me that the efforts to shift the public's focus to a different anchor are slowly beginning to bear fruit. So now are people beating down my door to hear about inflation? Not yet, but it says a lot that they're not beating down my door on the exchange rate. But what will happen if it hits 140? 145, 150. If we move outside that band that we've come to expect now, 125 to 138, because, that's a different psychological barrier now. Will there still be silence? I don't know. Maybe we'll hear the voices clamoring again. Maybe we won't, especially after it goes back down as it's been doing. Case in point, the day after it hit 138, it went back down under 138. So this two-way movement of the exchange rate is our new reality, and it seems people may finally be starting to get it. They may finally be starting to realize there's no need for panic. And it reminded me of a conversation I had a few months ago. Constant had invited me and some other journalists to speak with one of their consultants on communications who's originally from Russia. She was saying how Russia has gone through this same process. They used to be obsessed with the value of the ruble. Every time the exchange rate changes, there's a public outcry. And then she said, no, the ruble declines, no reaction. And I remember smirking and thinking, I wonder if Jamaica will ever get to that point. It might take us years before we see no reaction to these market movements, given how deep our PTDD is. Who would have thunk that just a year later, here we are, the dollar's down, and virtually no reaction. Not that I'm calling the opposition nobody, but there's a political agenda, and the concern is more credible when you have non-political voices raising the issue. So that's where I'm going to leave it for this morning. Thank you for speaking with me. My radio voice kicking in. Thank you for joining me. Wait, you weren't speaking to me. Thank you for having me. Nice to be here.
I think what we're picking up from our presentations this morning is just, again, some economic phenomena. We have scarcity, we have scarce resources from the foreign exchange, from our policy tools, and the question is, what's the best thing? We're looking at inflation targeting. We're on that journey. It requires independence, it requires accountability. There are preconditions and other mechanisms that we need to have in place. But it sounds like the program is working, it's paying off dividends, it's starting slowly and may pick up, it may be sustained, but it's still a fragile process. What I'll do is open the floor. There are some mics available, and there are some ushers at the back waiting for you to just raise your hands and interact with our two panelists. Any questions or comments that you may want to put on the floor. We only ask that you identify yourselves before you make your intervention. Do we have anybody? We have about 15 minutes, so we can take a few rounds. 10 minutes, I'm sorry. So 3 mics. Anybody? Any other comments? They were very clear, I know, but here we have a gentleman at the front. Can someone?
Good morning.
Good morning.
I'm Teddy Alexander from T-Tech. Both presenters showed graphs that illustrated the movement in the exchange rates. And both graphs had peaks and troughs. So assume if we go by if we accept that it's due to market conditions, demand versus supply, could either presenter give us some idea as to why they think those peaks occurred and why some of the valleys occurred?
Yes. Essentially, if you are on a market where the price is dictated by demand and supply, which is the case for a flexible exchange rate, it means that if there are a lot of more people are demanding US dollar than the Jamaican dollar, the price of the US dollar will go up. And if you reach a point where, because obviously as the price goes up, demand may come down, or supply may come more to the fore. And that would actually you reach a point where supply is again higher than demand, which brings the price up. But one feature of the currency market in Jamaica and its work in progress is that there is a little bit of inertia in the way the market works. And as Kalila mentioned, there's some episodes of panic for no reason, because Jamaica has a very healthy level of reserve. The macroeconomy is stable. Inflation is moderate and predictable, so there is no reason for those panics. But you will usually have panic kicks in and the exchange rate start going on, on a particular trend. But eventually, given that it's a market-determined exchange rate, at some point, demand and supply will re-equilibrate, and you will see the exchange rate coming down again. So it's a combination of demand and supply, and sometimes some market friction. And it's work in progress, and the foreign exchange market is probably much deeper today than it was prior to the introduction of the B-Fix-It, because there is a lot of price discovery going on, and the bank is moving, and currently there is trading on Bloomberg where trader can see where the market is at each point in time, so they can price also their US dollar accordingly. And obviously, there will be need for information to flow to the central bank and outside of the central bank to improve transparency. Because one of the things that could happen is that in the market of 40 million per day, if you have a 200 million transaction, of course, that will push the rate up. So if those flows are anticipated by the market, not that the central bank will have to fill the gap, but if the market is able to anticipate those, there is no reason why you will have those sharp movement. But if there is sharp movement for some reason, the fact that it's market determined, those movements are bound to reverse somewhat back. That's the beauty of having a market determined exchange rate.
Mm. Just to add to what Constance said, and I can only tell you what I've been told, because like I said, I'm no expert. My job is to ask questions, these very types of questions, and these are some of the answers that I've received. Just as Constance explained, supply and demand issues, panic being one of the reasons given, hoarding being another reason speculated about, and of course the switch from, because Jamaican dollars are now more attractive than they used to be, a lot more attractive than they used to be. You have a lot of companies switching over their debt from US dollars to Jamaican dollars, and so they have large transactions sometimes in one day that suck up all the US dollars in that particular day, and that can affect, because our market here is so small, that can affect the entire exchange rate for a few days. Layman's terms.
Any other questions on the floor? Comments?
Alan Lewis, Jamaica National. I just wondered, Constance and Kalila, what do you think the external environment, how is that affecting our ability to maintain the regime that we have embarked upon, particularly, the very low interest rates that prevail internationally? How resilient do you think we are when that situation changes?
Actually, what you're mentioning is actually a reason why you should maintain a flexible exchange rate, because you could think of an exchange rate as a shock absorber. Because those countries are keeping their interest rate low because they want to stimulate the demand in the economy. So Jamaica should be focused on stimulating demand in its own economy. And if you are obsessed by what's going to happen to the exchange rate, you're not going to be paying enough attention to your local economy. And that's the whole thrust of inflation targeting, is that you are focusing on delivering stable price to your consumers, and you're not too obsessed about what's going to happen to the exchange rate. Because inevitably, at some point, if you are over concerned, you won't be able to, let's say, cut your interest rate as much as you would have, because you will be worrying about the asset price or the interest differential between the US and Jamaica. So the thrust of the reform is really to focus on delivering stable price to the Jamaican people and without worrying so much about the exchange rate, because let's maybe remind ourselves that exchange rate is a very narrow price. Beyond not being, as Kalila mentioned, an indicator of the health of the economy, it's a very narrow price. The consumer price index actually includes the exchange rate. It does include imported goods. So Bank of Jamaica is saying, I'm going to deliver to you something broader than the narrow exchange rate. So that's the thrust of the reform.
You know, as you asked that question as well, I also started thinking about one of the points that I didn't get to in my presentation, which is one of the manifestations of this new regime is we see people, a lot of young people too, moving away from savings in US dollars and things that savings in the bank in general, because we now have low interest rates in the bank. Savings in US dollars aren't guaranteed anymore. And we see these people moving to the Jamaica Stock Exchange and putting that money there. I was very surprised when the CEO of the JSC said for the Wigton Wind Farm IPO that the average first-time investor invested $124,000 in Wigton. I was like, people have so much money. Yeah, a lot of young people, under 40, people in their 20s, people even in their teens, investing, and that was the average. It means there was a lot that were very, much higher as well. So people are shifting their focus in actions. It's not just people aren't as panicked anymore, but we're seeing that manifested by their actions and what they're actually doing with their money now.
And just to echo, to pick up on what Kalila is just saying, one of the thrusts of the inflation targeting is really to deepen markets. And there is a virtuous cycle whereby if you are able to have a predictable inflation environment, you will develop domestic assets, because that's what it's all about. Mr. Clark mentioned the possibility in a 5-year time to have investors seeking Jamaican dollar papers, right? So the more the framework is entrenched, the more domestic assets will be developed, and the more domestic assets are developed, the more successful the framework is going to be. Sorry, there is a feedback loop there.
Okay, I think we still have time for one more question if there is. Otherwise, I'll have the panelists make any last remarks, and we'll close this session. Do you want to say anything further?
You know, just one last thing that I wanted to point out on that same point from the question you raised as well, and Constant was also starting to allude to it. I think it's good for the economy, what is happening when you see people not focusing on trying to profit off US dollars anymore and pumping that money into the local economy. Instead, it's a win-win situation, because now rather than the bank holding it for no reason and not doing anything with it, that money is going to people who need it, to small businesses, medium enterprises who can do something meaningful with it, grow their business, give you a good return, and grow the entire economy at the same time. So I'm fascinated to see what's happening before our eyes.
Yeah. Maybe just to say that I'm very glad that we're having this discussion now, because it reflects how far Jamaica has come in terms of entrenching macroeconomic stability, and inflation targeting is that framework that will further entrench that stable environment. And we should perhaps remind ourselves that essentially countries will have two policy levers: monetary policy and fiscal policy. Obviously, you have the structural reforms as one of the pillars. What happened is that by managing your exchange rate, you're actually giving away one policy lever, which is your monetary policy. And certainly, the debt to GDP in Jamaica being still very high, although it has come down dramatically, still at 95% of GDP, there is no enough fiscal space to absorb all the shocks that the Jamaican economy is potentially subject to. So you want to keep your monetary policy lever. That means focusing on stimulating the demand when inflation is below target and leaving the exchange rate alone. Obviously, there are short-term fluctuations and there are market solutions to those, and I believe that will be the discussion in the session on hedging instruments.
Okay, thank you. I'm sorry, can I take one more question? I just see a hand.
I am Ina Wong Sam from Ina Wong Sam Limited. I'd like to make a point that the foreign exchange rate is being assisted by the stock market at the moment. Instead of consumers or the public in general hoarding the US dollars, they are now looking to the stock market where they can get better returns on their investments. Thank you.
Okay, thank you. Just help me to thank again our panelists, and thank you all for having us here this morning.
A stimulating session one. Thank you, Dr. Constant Lonken. Thank you, Mrs. Kalila Reynolds, and our erudite facilitator. Thank you, Dr. Christine Clark. So, colleagues, we are going to break for 7 minutes, where we will, 7 minutes, I know, it's a short time. But we're having such a great time, and it's exciting, and we don't want to disrupt the flow. So we're going to have you have the break, and we will come back as we start session 2. Thank you so much. This event is being streamed live on GIS's website and on the Ministry of Finance and Bank of Jamaica's Facebook page. It's also being carried
Okay.
Is it afternoon as yet? It's still morning, wonderful. I know that we have all enjoyed our refreshments and we're going to proceed with a degree of alacrity. I now invite Mr. Tafai Bryson to the podium as he speaks to the role of Bank of Jamaica in the foreign exchange market. Please make welcome Mr. Tafai Bryson.
Go back or not. Great morning, everyone. I'd like to first thank the Ministry for inviting the BOJ to present at this FX Symposium, their FX Symposium, to discuss the role of the Bank of Jamaica in the FX market. And the outline of today's presentation is threefold. We'll start off with the overall monetary policy objectives. Some of the speakers before would have spoken to the monetary policy objective. Thanks. The monetary policy objective in broad sense. Then we'll look at how that fashions our activity or role in the FX market. Then last but by no means least, we'll be looking at the foreign exchange market developments which come out of the first two. So, starting with our overall objective. In case you guys have missed it, our media blitz, BOJ is all about inflation, and in particular, we are more about low, predictable, and stable. This is where you come in as a chorus. Not too high, not too low, Goldilocks, if you like, kind of inflation targeting, and a Goldilocks type of inflation. So we're all about inflation targeting here at the central bank. Now, the primary objective, as you should be able to repeat, is low, stable, and predictable inflation. And we are interested in the low and stable inflation because with low inflation, there's a great amount of certainty. And persons can plan, individuals and investors and businesses can plan and make investments accordingly. Looking at an environment which has high inflation, you would have greater uncertainty, and also it reduces to a large extent the supply capacity within the economy. Oh, I forgot to. So, as we can see from my chart right here, of course, not drawn to scale, inflation erodes our purchasing power and also erodes the value of our savings. And we found, as Dr. Constant would have said, the IT framework or inflation targeting framework is one which we have found to deliver the results which we want in terms of low and stable inflation. And the main policy tool which we use to achieve this is our interest rates. Wow, okay. My bad. So going over for emphasis, I'm just kidding. As we can see, well, I really like this one. Okay. Right, so let's go right here. So as we see, when we are targeting the inflation directly using our policy rate, using other targets can be problematic, and we have discussed earlier the impossible Trinity, or the trilemma, if you will, about having more free mobility in terms of our capital markets, an exchange rate target, and independent monetary policy. So we can appreciate that a flexible exchange rate is better to absorb shocks within the economy. And while we care about growth, the exchange rate and financial stability that should be, inflation takes precedence over all these other concerns. Now, the main connection between our overall monetary policy objective and what the role that BOJ plays in the FX market is that of a flexible exchange rate, flexible and competitive exchange rate. And in order to achieve that, the bank is focused on two main premises or two main goals, that of improving transparency and price discovery, as well as reducing the footprint within the BOJ's footprint in the FX market. Now, with respect to improving the transparency and price discovery, we have looked at monitoring the data that comes in and doing some market surveillance so that we have a better understanding of what is going on within the FX market and can do actions accordingly. We also collect data and disseminate the same information, well, aggregated information, to inform individuals and agents about what is happening within the exchange market and also to help them with price discovery. As you can appreciate, an example here is if we go around by Coronation Market and we're interested in buying tomatoes. If we're buying tomatoes and we have silos in terms of big tall walls, just imagine, I know it's hypothetical, and we don't know what is happening in one area or as opposed to the other, then the price can be, the dispersion of the price can be wide. So the BOJ in this goal, the BOJ in this role is trying to add information to the market so that everybody knows what is going on, everybody knows what the general price is. And if you guys, individuals in general, shop around, then there will be greater amount of price discovery and transparency in terms of what is going on within the FX market. The other goal which we are charged with doing is, on occasion, being a participant within the market. And I stress the on occasion because what we are going for a flexible, competitive, market-based exchange market is that we wouldn't have any interference as a central bank or minimize the interference within the market because we want it to be market determined. So our aim as a participant is twofold. We want to look at building reserves and also addressing disorderly market conditions. So these are the basic roles in terms of what we are looking at from the BOJ perspective in terms of our role within the FX market. Now, as I said before, in order to achieve our broad goals of improving transparency and price discovery, as well as reducing our footprint, we need market-determined rates. And we have embarked on several initiatives with our international partners and also with the industry players in terms of fostering an environment where we have this price discovery and we constantly in dialogue with market players and other stakeholders as well as from recommendations from our consultants and also from IMF technical assistance programs to look at some of the foreign exchange market developments which would help achieving the goals which we have established before. Now, these are a few that we would have embarked on in terms of the initiatives, auctioning of the BOJ intervention funds whenever we intervene, enhanced reporting, net open position FX limits or positions, improving our market intelligence, the introduction and dialogue with the industry on FX code of conduct, and the one to come, which is I would like to think it's great, there is great anticipation around it, is the FX trading platform. So to look at the trajectory, the trajectory of our FX market development, it really started in 1991 when we liberalized the FX market. And I noted that Mrs. Reynolds started her analysis in 2017. And I found that to be, that would be the major turning point in terms of how the market would have been behaving and it would have really given credence to some of the market developments which we would have embarked on. So in 2017, as we see, we would have introduced in our BFIXIT, and this was to ensure one of the major changes as it relates to BFIXIT was the introduction of intervention that were market determined. Further, within that same year, we would have looked at improving our market intelligence in terms of having a greater appreciation of the sources of the funds and the inflows and trying to forecast, or looking at the forecast for demand and supply within the market to have a better understanding and grounding of the FX transaction which take place. Looking at one of the graphs presented prior, the note was made that last year in July we would have observed an uptick also. So there, I mean, just off the top of my head, I mean, I'm just thinking that there is some cyclicality around that period of time. Should we expect it next year? Maybe, maybe not. We probably have to, as the minister would have noted, the fundamentals are underpin no shortage in the market, and also the transactions that occur within the Jamaican market are lumpy. So having that information and improving that information underscores our dissemination of data, and also provides us a guidance to improve the price discovery and transparency. Further to that, we would have looked at NOP limits, which have a twofold purpose. We were looking at reducing the volatility as it relates to within the FX market, and also managing the FX risk by the dealers, which we would have observed. There is also enhanced reporting in 2019. We would have continued on the developments. Within 2019, we would have started to publish transactions, large block transactions, and the related prices. And those would be anonymous. And of course, you can access that on the website. This is in the spirit of price discovery also. So, for instance, you want to buy or sell at any point in time or any day, you can have an idea of what are the going rates for those large block transactions by coming to our website. So it provides a greater space in terms of what is happening. So we're breaking down the walls in terms of what is happening with transactions. We also, in 2019, we would have looked at FX Code of Conduct, which are guidelines on fairness, and we would have been in constant discussion with the industry in that regard. Further to that, in 2019, we will be also looking at FX forward contracts, which we will discuss in greater detail later. So we would have done industry consultations in that regard and looked at putting in guidelines where that is concerned, and have a better understanding in terms of forward contracts and having that as a part of the BOJ enhanced reporting. Now, in 2020, we can anticipate that we will continue on the path of improving our price discovery by the introduction of our FX trading platform, which would have price transparency with real-time settlement. Now, this is this would be a great achievement as it relates to BOJ, and in terms of improving transparency. What we have now is a reporting system where transactions are done and reported through our eGate portal. Now this would be all real-time, where the interbank traders would be able to post bids and offers, and they would have automatic settlement once it is found. So they could be matched and found. All of that information so BOJ's role in all of this is to enroll the authorized dealers and cambios which would participate. And an additional aspect which speaks to our commitment to price discovery is that on this platform also, you'd have corporates will be able to view the trades that are occurring. So before, as it is now, at the end of the day, we would see the large block transactions and the prices related on our FX platform. You'll be able to view real-time what is happening, transaction which would have occurred. So you're closer to the market, and at which point you may see a price which you, or an amount which which you like as a corporate or an entity, you could contact your dealer and say, I like that price, I want to buy or sell at that price. So all of this coming closer to a real market whereby you would go to Carnation Market and you would buy the commodity which you want immediately. Or through, you have real-time interaction with the price and you would contact a dealer. Of course, the dealer would have to make a commission. That's how it works. So basically, in 2020, we would have the FX trading platform in the second half of 2020, which is something to look forward, and it will be revolutionary in terms of improving transparency and price discovery. In the interim, because I know, even though you may not say it, you may think it, but that's all the way in 2020, what we can do now. For the interim, we have a Bloomberg solution in terms of B-Match, where offers and bids are posted on the Bloomberg platform, and as it is right now, corporates can view to the extent that they have a Bloomberg terminal, and also institutions can post their bids and offers on that. So this is an interim solution which brings you closer to the market, and corporates can view accordingly and make their business decisions. But the real deal is the FX platform, which we at the BOJ also anxiously anticipate. So, in borrowing the words of our international partner from the IMF, the main aim here is to maintain market-determined exchange rate with BOJ's intervention limited to episodes of disorderly market conduct. And thank you guys for having me. Thanks.
Thank you, Tafai Bryson. So I'm sure that we're all now a little more aware as to the role of the Bank of Jamaica in the foreign exchange market. And I think there was a buzz. It's about price. What was that again, Tafai? Price discovery. That's a new phenomenon for me. So I think I have a little more information as it relates to price discovery, because I thought price was just that means that came about from demand and supply. Now I know we can discover price. It's good to come to these forums, you learn so much. So this time we're going to be taking questions. Please indicate, and we have persons at the back who will present their microphone to you. Questions or comments from the floor? Tafai, this is how you know you have done wonderful, and that there is one to break the ice. The mic is on its way.
Kwame Brooks, JMMB. So far, I've heard a number of solutions being put forward, except one that I really, really want to hear. So I want to know, and this would be more for the ministry, the BOJ, and the private sector as well. Because when we speak about pricing of the dollar, there are some underlying factors that drives the behavior of people. And what are these factors? First question is the country earning enough foreign exchange? If that is yes, are people willing to convert that which they are earning? And if that is so, why is the foreign exchange deposit base so high relative to the total deposit base of the industry? What is it that will make people who earn foreign exchange more willing to sell, knowing that when they need it, they will get it back to buy? Because somehow at times, the impression can be given as if to say, it is because information not passing between the buyer and seller or from the financial institutions and so forth, why the dollar being the commodity is not priced properly or efficiently. So my question is, from the BOJ, with your information and your projections jointly with the MOF, what measures can we look forward to that will ramp up our efficiency as a country, that makes us export more to earn more foreign exchange? And what will incentivize those who earn the foreign exchange to be willing to sell to those who need the foreign exchange? Because from my knowledge, I don't think that we are short on foreign exchange so much as how those who have it are not willing to depart.
Tafai, your response?
Great morning, Kwame. That's an excellent question. I'm wondering if I should leave alone or well, Kwame, full disclosure, that's who I am. The question on whether Jamaica earns enough foreign exchange is recorded in our current account. Within our balance of payments, that's our interaction with the rest of the world, in particular, or to a large extent, the US. So we have I've had these discussions many times with some of my friends. So the thing is, our current account is not what it used to be. It used to be 11 double-digit negative, which is far away from where we are now. So should we see the same movement? Should we have the same thoughts? Should we behave in the same way? No. We are not. We have closed the gap on probably a month or 2 or 3. So the movements are lumpy. But generally, there's no pressure coming from just broadly earners versus users. Broadly. There's not that pressure. To the extent that there is a movement within a month where someone needs some US, or there's going to be movement. And that will be showing up in our price. So the thing is if you have a marketplace where the buyers and the sellers are divorced, then price discovery is that much further. The FX platform promises to bring that closer, which is a solution within itself. As it relates to, so within the balance of payments, not to get too technical, within the balance of payments, you also have the portfolio side in terms of persons want to preserve their savings, earnings, flows, investments. Again, with another discussion I had amongst friends, and I can just say, play it. The man say, yeah, man, as me get my pay, we just convert. But numbers don't lie. So if you look at the return that you would have gotten over the last 3 years vis-a-vis investment in local stock market, even if you convert, the stock market is leading. So is it that you're going to behave doggishly with a conversion policy that is really not in your best interest? Are you trying to preserve it, or are you trying to just follow the herd? So probably the reason why people have not realized that is the same information. So we try to provide information on the website, which if persons try to draw attention to that information, so person can utilize that information to make better decisions. So the FX platform is one of the price discovery, market determined aspects to come. We have also added some publishing data on our website, which we have articulated, and some persons know, and we are trumpeting that, but under the inflation targeting blitz, to let persons have a better appreciation of what is going on and develop the price discovery and transparency, because we are not trying to hide one aspect as opposed to the other. And as we say, we're interested in the flexible exchange rate. So these are some of the measures, and again, part of the reason why I stressed in the presentation price discovery is because the herding happens when persons aren't informed. I heard this or I heard that X, Y, but I mean, if we have the data posted there, you don't need to hear it, you'd see it. If you're asking intraday, if you're looking at intraday data for the US, you don't need to ask somebody, you go on a platform and you see what's happening. So that is the idea. As it relates to exports and a policy about earning more, I would smartly say that we're inflation targeting. That speaks to a broader policy which exists up by Hero Circle. So if we are bombarded with multiple policies, we may have conflicts as we would have stated. So we just focus, laser sharp focus. I hope that answers your question.
And we know that he was just speaking among friends. So we want to thank Tafai for that response, but what we got from it as we are speaking as friends is that there is no, while we recognize that there's a concern in terms of if I give up my foreign exchange, will I be able to get it back? The situation now is not as it was then, where we were in double digits negative. We're now in a better position. We are also hearing that we're moving to price discovery, which allows us to be better able to plan for those events that may cause concern. We're also being told, as Tafai has said it, is that it really is not just a Bank of Jamaica, it is a collaboration. And as we move to an independent Bank of Jamaica, we will see a different approach on the platform and the buying and selling of this commodity that we call foreign exchange. Thank you very much for that question from Jamaica Money Market Brokers. And Tafai, for your response. Do we have any other questions? One more? Yes. Was that a fake question hand going up or a real question hand going up? You have a follow-up, Mr. Kwame. No, he's shaking his head. He said he's good. We're talking as friends. We'll save the rest for another location. Yes, please, Mike.
Hi, morning again. Teddy Alexander, TTEC. I'm no economist, nor am I an expert on matters of financial affairs, foreign exchange markets, and so on. But as a follow-up to that particular question, one observation I have on my own personal practice is that I think a large reason why people are not converting US back to Jamaican is because of the spreads that exist at our commercial institutions. If you think about it, when we travel, most of us go and get a little US dollar cash. When we come back, do we give it back to the bank and convert to Jamaican? No. And personally, I don't do it because if I do that, I'm likely to lose about 15% of the value of my cash. I actually just looked at the websites of one of our large commercial banks, and what I found was that the selling rate for cash and checks, 138.99 to the US dollar. The buying rate for checks was an $8.50 differential, so a 6.1% spread on checks. With cash, the spread was $21. Or 15%. And that's just, I could go in the morning and return it in the afternoon, $100 US, bam. I've lost 15%. On pounds, the differential, the spreads were 7% on cash, 3.9% on checks. Now, given the low interest rate regime, why would I convert foreign currency to Jamaican currency? I believe that until we can get the spreads down, you are going to find we all become mini hoarders of foreign exchange, particularly US dollars. My comment.
Thank you so much for that. Tafai? Peter Higgins. National Commercial Bank.
Okay, all right, so let me answer that question or address that issue. The truth is, cash, nobody wants cash. We are going to price cash. We don't need it, we don't want it, so we're going to price cash at a very low rate. If you go in, say, Trinidad, the actual price in between cash and check is far more than 10%. If you go into the US, it's even worse. If you go to the UK and try to convert your pounds into dollars, the spread is going to be very wide. The truth is, if you look at the rates, if you go on the BOJ website and you look at the spread between buy and sell rate, I think on average it's about 0.5%, less than about 0.5%. So it is not entirely fair to look at the spread between what you're buying cash at. Because the truth is, if I'm buying $100,000, if I'm buying $1 million, the spread that you are going to make is probably going to be in the cents. It's unlikely that, it's not unlikely, it's almost impossible that any person that is selling a significant amount of foreign exchange would allow a bank, a Cambio, or a dealer to make that wider spread on them. So the truth is, one of the problems we are faced in the banking sector is our correspondent banks. We would have heard about the de-risking in the Caribbean. They do not want us to ship cash. And therefore, we don't need to have the cash. So we don't give you a good rate, as they would say, on cash transactions. Checks are not cash. But as I said, it depends on your size, it depends on the volume, but at the end of the day, and you can see the information is available, at the end of the day, I don't know anybody that can make 1% on foreign exchange.
Okay, thank you for that, Peter Higgins. We'll hear more from him in session 3. So we are understanding that while it is the experience of some persons that they prefer, if they're holding the foreign currency, they would not sell it back. We are appreciating that the bank does not generally want to have competitors, for want of a better word, in the market. They don't want gold cash. They don't want you to hoard and make a lot of money on that. It's not good banking business. And you would find from our presentation from session 1, where Kalila said that rather than do that personal trade, people simply put the money on the stock exchange, and they earn more and have less risk. Any other questions for Tafai Bryson? Or comments? Tafai, we want to thank you very much for a very enlightening discussion as we learned more on price discovery.
All right, thanks. Thank you, madam. Thank you.
We will now invite to the podium as we move into session 3 for hedging products, Mr. Sylvain Choquette, Mr. Peter Higgins, who gave us a preamble just now, Mr. Vernon Douglas, and Mr. Larry Watson. This session will be facilitated by Jerome Smalling. I will now hand over to Jerome Smalling, who will facilitate this session.
Thank you very much. Thank you, President. Okay, good morning. So we're lined up for what I'm anticipating will be a very exciting discussion on hedging products. This session will explore the gamut of hedging products, for example, forward contracts available for foreign exchange users, earners, and international best practices for these products. The speakers have been introduced. Each speaker has around about 15 minutes. We are going to keep it tight. At the end of each presentation, I'm just going to ask the other speaker to just come to the podium. We will have questions at the end. So it is new, it's novel, and so I'm going to invite lots of questions. So without further ado, I'll ask Sylvain to start.
Thank you very much. Thank you to the Minister. Thank you to his team for inviting me to talk about planning in the FX hedging with the Jamaican business community. My name is Sylvain Choquette. I'm a consultant in market developments and in FX reserve management. We hear often about the difficulties of planning because of the FX market in Jamaica. So we'll first talk about what is planning and what is not planning. And then I'll look at the available instruments for real planning. I also have my chart. Oh, sorry, they're not. Okay, you don't see them. Sorry about that. Okay. Okay, we're back. Okay, sorry about that. So I do have a chart. Until 2016, we knew the US dollar was going up. So everyone was buying ASAP and delaying their sales. That was the PTDD period that we heard about. But now, for the last 3 years, speculation has not always been profitable. It used to be working all the time before. We're now in a different setup. We are now in a different setup. So the range of 131 plus or minus 6% has been very tight range compared to history, and that two-way activity with small level of the central bank intervention are a good sign. When I'm looking I'm going in different markets, different countries to look at their FX market. This is a sign of a much more evolved and balanced market that we're experiencing now. And when we look at past 3 years period, the range has been over the mid-level from plus to minus 8% to plus to minus 13%. So again, a good sign of stabilization that was discussed earlier in the presentations. So planning back then, in the crisis time, was a mix of expected FX speculation profit, and often the FX speculation profit was larger than the operational margin that companies were benefiting from. So the profit from hoarding dollars, like it seems to be the way to describe the way it was done back then, or the profit of selling as late as possible. Now, much different situation, where it's not possible to plan the FX speculation profit. So we have to go back to what is real planning. And real planning now is fixing your operational margins, hedging. So in this new environment where depreciation is not a given anymore, when speculation profit is not a given anymore, you focus on what you're good at. You eliminate your FX risk, you fix your operational margin. And that's what we'll talk about now, the instruments that are available. And they already exist. You're already doing it now when you're doing DIY forwards, when you are using your excess J-dollar balances to buy US dollar that you do not need immediately. When you sell those J-dollar, buy the US dollar and you obtain a return on US dollar deposit. But you could also, if you don't have J-dollar balances, borrow them and then sell them to buy US dollar and obtain a return on the on the US deposit. The only difference is that now you're not speculators anymore. So you used to compare the implicit price that you were getting with the actual price of the US dollar at maturity. Now this is different. You have to use the US implicit price that you're getting and only use it for your margin, your operational margin. And you forget about what happens after you've hedged your strategy, you've hedged your position. You forget about whatever the FX price will be. Now with that new environment we've seen in the charts on the recent year, the 7 peaks that were highlighted by Mrs. Reynolds, we know that it might be a good idea to sell dollars on peaks. The market moves both ways. So the sellers might be also interested to come in and sell dollars to fix their margin and should be interested. So they could use their US dollar balances to buy J dollar ahead of time. So and then they would obtain they would a do-it-yourself forward. They could also, if they don't have balances in US, borrow to create the same structure. So sell US dollar, buy J dollar with them, and invest them while you wait for to have the needs to pay your taxes or your local staff. So FX market, not a one-way bet. It was mentioned earlier, I think, by Tafai. And so fix your operational margin and forget about the FX risk. But if you don't have to do it yourself. You don't have to go through all that trouble. So if you do not have the extra balances in the currency that you need to sell, if you do not want to borrow in the currency that you need to sell, banks will package it for you. They are selling and buying FX spot. They are lending and borrowing in US dollar, and they are lending and borrowing in J dollar. So they are trading in all the required ingredients to prepare a forward. So, and they will provide you an all-inclusive forward price to buy or to sell your US dollars. In Jamaica, the banks have no excuse for not offering FX forwards. There are no exchange controls. I go in countries sometime where we try to develop the forward market, but it's impossible to go around all the hurdles that are in place with the exchange controls. Much larger countries, but with no way to build the forward market. There are the regulatory framework allows forward. There are countries where I go where it's not specifically allowed to do forwards. Here, there's no such hurdle. Spot market is liquid enough. It's not as liquid as everyone would like it to be, but it is liquid enough to create a forward. The interest rate markets in dollar and in J dollar are also liquid enough. So your banks have to offer the product. So shop around. You can. That's also another thing. You can shop around. I go in markets in countries where, if you are dealing with one bank for your main activities, you have to do your FX business with that only bank. You're not allowed by regulation to shop around. Here, it's free. Go around. And you compare that price that you're going to get from the bank, the all-in price, with the do-it-yourself price that you can construct on your own. So the forward price is not, that you're going to get is not going to be exactly the price of the spot transactions, because the hedgers will have to forego the return on the currency they sell, and they'll get the return on the currency they buy. So in markets where the US interest rate is higher than the J dollar, the implicit forward price of the US dollar is going to be lower. And conversely, if the US interest rate is lower than the J dollar, the implicit forward price of the US dollar is going to be higher. Sorry. So in current market conditions, what it means is that the theoretical price of a US forward in 1 month should be equal or less than the price of a US dollar spot. So when you call your bank, that's what you should be getting. Or if you do it yourself with the DIY methods, that's where you will end up. If you go to the banks, don't be surprised. They will have to ask you for some documents. They manage risk. So they have counterparty risk when they deal a forward, and they have legal risk. So they will need you to go through some oops. So the credit risk is the risk that the other party defaults between the deal date and the forward date. So it's best practice for them to cover that risk. And that risk, for example, if a bank sold $1 million US for delivery in 3 months at a price of $135, but the client goes bankrupt the day before the delivery, and the spot market is now $125, the bank ends up losing $10 million J dollar because it has not sold those dollars at $135, and they're now only worth $125. So to protect themselves, it's best practice for bank to apply some of your credit line on the forward transaction, or to ask for some collateral. But the credit risk is not only on the bank side. If you, as a client, have bought $1 million US forward for delivery at 128, and your financial institution has gone bankrupt, the current price of 138, not 128 anymore. So nobody will deliver those dollars to you at 128, and you will have edge. You'll have to pay the current price of 138. So you'll end up losing 10 million J dollars. So unfortunately, you're not in a position to ask your banks or your financial institution to put collateral. So make sure when you're dealing forwards that you're dealing with solid counterparties, because you're exposed to that risk. It's not only the banks which are exposed to the credit risk. Then there's documentation that is a part of the frame, that has to be part of the framework when you're doing forwards with banks. They are contracts. Forwards are contracts. Each party has to deliver on its part of the deal, whatever the price at maturity of the dollar. So best practice requires that parties to formalize that contract. So you'll have a master agreement in place to cover all the forward transaction, potentially including netting agreement, collateral requirement, and other procedure. And it might require your lawyer to get involved depending on the chosen master agreement. The other component of the documentation is that there has to be a written confirmation of the trade details quickly after each trade. So that will specify the price, the delivery, the date, the amount, because you want to make sure that if there was a problem, there was a misunderstanding when you book that trade, you much better find it now than 3 months later or 6 months later, when the price might have moved by a lot, and the financial consequences on one of the two sides will be quite significant. Tafai has talked about the platform. One feature of it, which will be interesting, is that in the second phase, it will include the indication of the forward points, again, to help you shop around, again, to help you for price discovery. Sorry, I'm looking for the topic word, price discovery. So shop around. And finally, looking ahead, the next hedging products, options. The market is not ready for that now. But it might happen, like the minister was talking earlier about the bond issue in 5 years for global investor in J-dollar. That could be the same horizon for the development or for the use of options in the market with the development of the liquidity in the FX market. So, thank you.
Okay, thank you, Sylvain. We'll now ask Peter to come forward.
Good afternoon again, ladies and gentlemen. It's my pleasure to be here, actually. I would like to, first of all, thank the Ministry of Finance and the Minister of Finance for inviting us to this function. We'd like to thank the BOJ, Senior Deputy Governor Robinson and Deputy Governor Natalie Haynes for having me here and for hosting the function here generally. Before I begin, I want to give a shout out to GIFS. GIFS is the training institute for the Jamaica Bankers Association. One of the Tafai would have spoken earlier about some of the changes that is happening to the market and some of what we expect in 2020. But one of the changes that we're actually doing now, one of the things that we have done is for the Jamaican FX market space, all our commercial banks, authorized dealers, and cambios have all agreed that we are affirming the Global Code of Conduct. And I think there's going to be a signing ceremony shortly. I will leave that for BOJ to make the announcement of the date. But just to say that so far we have done some certification, so we have been educating players in the financial sector about how to conduct business. I mean, we are all supposed to be doing ethical transactions and we're trading by a global code, by normal good business code. But sometimes we don't realize that as bankers, as dealers, that we might think, for example, that I am trying to get the best price for the bank. But really, one of the things that you learn when you follow the code that you really should be getting the best price for your customers. So what we have done since June this year, we had a cohort of players in the market. They sat the Global Code of Conduct examination. There is another exam coming up in August, so you can go on the GIFS website. It's not restricted to financial sector persons, so everyone can go on and sign up for the Global Code of Conduct certification. GIFS also have a number of other courses. The ACI Dealing Certificate course, I would recommend that accountants and people who are in charge of the foreign exchange businesses in their respective companies, I would encourage you to go on and, as they say in Jamaica, log on. So I'm here this afternoon to give you the commercial banking perspective as it relates to forward contracts. And I would begin by saying, and I think Sylvian mentioned that forward contracts is only one of a number of hedging products that's available. But for now, the focus is going to be on forward contracts. Forward contracts, ladies and gentlemen, is actually not new to Jamaica. It's actually not new. In the 1980s, forward contract was a regular part of the market, but we had some challenges. What were the challenges? People would look at the rates that were published in the Daily Gleaner and I think the Jamaica Daily News. So people used to look at those rates. So you would see a forward rate for 30 days, 60 days, or 90 days. And the psyche in the market was that, hey, BOJ is projecting the rate to be 150 in 30 days. So I'm buying now. So what happened is that the forward rate actually became the spot rate. And so we had a lot of panic, and therefore what happened was that we stopped reporting on forward rates, and it was kind of discouraged. So the practice of people buying forwards and banks and dealers executing forward with the customer, it died. However, interestingly enough, this globalization is an interesting thing. What we found in the mid-2000s was that a lot of foreign firms that were now headquarters in Jamaica, they are used to these forward contracts in their market space. So they started coming to the banks and say, look, we don't know what's happening with the Jamaican dollar. It's all over the place, and we need to hedge our bet. We need to know how to plan properly. So in the mid-2000s, we started hearing that forward contracts were being executed, but the problem we had, and that's one of the problems that is now being addressed, is that so contracts were being executed. We started some execution in forward contracts, but no information was being captured. So the BOJ did not know what was happening. The pricing was all over the place. You could go to one bank and the price is for 30-day forward is 140. You could go to another bank and the price is 150. So there was no standard in terms of what were the pricing, how were we pricing the forward contracts. So that was an issue that started to raise its head as we started to see the reemergence of forward contracts. So since last year, September, the BOJ has been tracking the execution of forward contracts, and I will share some information. I think since last year, September to June of this year, about under 100 contracts were executed, about 80 contracts were executed. So in terms of numbers, in terms of absolute numbers of contracts being done, it is small, but in terms of, it's data that we didn't have before, and it's data that will allow us to size the market and get a better feel of what is happening in the market. The bulk of the transactions were concentrated in 4 currency pairs. It's the Jamaican dollar against the US dollar, the Great Britain pounds against the US dollar, the euro against the US, and the Canadian dollar against the US dollar. Overall, last year, during this period, just under $400 million in forward contracts were executed. So in terms of percentage to the market, because on average about 10 billion US dollar trades per year. So you might say 400 million is small, but I think it's a start. We previously didn't have this data, and now, as I said, we're having this information in terms of what is happening in the forward market. Why we're encouraging people to log on to the forward market is basically what everybody has said so far. It provides an edge. It provides a guarantee of supply, and it helps the banks, it helps the authorized dealers to plan and structure a better how better they're going to source foreign exchange from you for customers in general. Because one of the issues that we're faced with now, as I believe Dr. Constance spoke about earlier, is that one of the challenges in the Jamaican market space is that the flows of foreign currency is not even right throughout the year. So, for example, at the start of the winter tourist season, December to April, the flows tend to be a lot better. So you would see a lot more stability, for want of a better word, in the foreign exchange market. But what happened for customers who come in June or come in May when the flow is not as robust? So the data that we are now getting in terms of, even from our own market intelligence, it is allowing us to better plan so that we can better structure hedging type products for customers. So that is one of the benefits as it relates to the forward contracts. Sylvian spoke earlier, and he mentioned about some of the challenges, and there is a lot of challenges that we're faced. I think some of the challenges, and the education might help us to change some of the mindsets, because one of the issues that we're faced with is that even in large companies, corporations in Jamaica, even in large financial institutions in Jamaica, even in large government entities in Jamaica, you cannot get them to do a forward contract. They will not even look at it. They think it's complex. They don't understand it. They believe that if I buy at 140 today and the rate is now at 135 when it's settlement date, that I have lost money. And So that is one of the mindset that we need to change. Is it that you have lost money? Is it that you are better able to plan, and therefore you can properly execute your sales of your goods and services? Maybe that is what need to be looked at. But generally what we find is that even though some institutions have been trying to sell forward contracts, the mindset, even among people who are sophisticated, is that they will rather let it hang rather than hedge their exposure. Another issue we have from the commercial side, where customers are not certain in terms of how it's priced. How do we price forwards? I mean, the books and the experts will tell you that it's interest rate differential. But what we found is that most dealers, they're not going to price you using interest rate differential. They're going to price you and they're going to put in a premium. Because they're putting in a premium because there's the belief that the market is not as liquid, so I'm taking a risk, so I'm going to price you just in case when I am delivering, I don't have that liquidity and I'm going to have to go to the market. So that is one of the challenges to getting more, the execution of more forward contracts. Another challenge is there is a lack of what I would say a master agreement. What is the legal document I'm going to sign? You might come to one bank and you have a 10-page forward contract that require a customer to employ a lawyer, eroding the cost or the benefit of having the contract in the first place. You might go to another bank and it's a one-page document, or you might go to another bank and it's an email. So that is a challenge that we need to fix in terms of, are we going to have a standardized master agreement for all forward contracts across Jamaica? Sylvian already spoke about the counterparty risk involved, so I'm going to skip over that one. And I also mentioned that the BOJ, prior to September last year, had no sight of forward contracts. Nobody knew what the size of the market was, and nobody knew who was participating in the market at all. And of course, I think Taffy spoke about this, the NOP limits. And one of the challenges that we're having, and that's what the bankers are telling me, is that the NOP, the NOP limit is actually hindering the provision of liquidity to the market as well as the development and structuring of more hedging products. Right, bankers? Is that true? Right? But one of the big challenges that we face, I think this is probably the biggest one, in my 20 years as a banker, the only time or the only year that I've ever bought a forward contract was sometime this year. All the forward contracts that we have done are generally one-sided. The customers are always wanting to buy a contract, so we're always getting the demand. Hey, I need a contract. Oh, I have a transactions in 2 months. You need to hedge me. But the truth is, most of the times, at this present moment, we are unable to either cover you fully because everybody is always on one side of the fence. So there's a little imbalance. So the challenge, and this is a challenge, I guess, for the country, is how are we going to get the earners of foreign exchange to sell and to execute forward contracts? Because by and large, it's funny, by and large, they're not interested. But, so for example, if you go back to last year when we had some stability in the rate, I will still have some stability because I don't believe 4 or 5% is instability. Because if you look at international markets, 4 or 5% can happen in one day. But when we looked at, when we have periods of stability, like when the dollar went down to 129, I had to be refusing money to buy. Because every single hotel, every single farmer that earns foreign exchange, they're all calling. I mean, during periods of down, when the dollar is depreciating, I might hear from a customer maybe once for the week. During appreciation, and the BOJ numbers prove it. There's more, BOJ gets more money from surrender because the banks are buying more money, and we're getting more money from customers when there's an appreciation in the currency. But what we really would like to see is a more willingness to sell the money right through and not to wait until there's specific, 1 minute, I need, okay. And not until there is specific events happening. Now, so since I have only 1 minute, what are some of the next steps? I believe that one of the way we could solve some of the issue we have with the liquidity is for the BOJ actually to become an active participant in the forward market. So what I would like to see, and BOJ, you can check this out, what I would like to see is even in terms of how you intervene in the market, maybe you should intervene by selling a 30-day forward, because you're seeing the market flows and you're seeing the period where it's going to be uneven. So maybe you could intervene in the market through the forward contracts. And of course, the JBA and GIFs and the BOJ will continue to try and educate, and we're expecting to see more symposium like this so that people can get a better understanding of not only forward contract, but other hedging type products. Thank you.
Thank you very much, Peter. I'm sure you'll be having quite a few questions at the end of the session. Vernon?
Yes. Thank you, Jerome. Good afternoon, everyone. Well, after hearing the confessions of a banker, I'll be very quick. So, a lot of the material we have here, some of it is repetitive, so I'll move quickly along. But I'm here to share the perspective of, the sole electricity provider in the country, which I think we do business with everyone inside this room. And I think it's very important as a large user of foreign exchange to share our perspective of the matter as a corporate as well. So I want to thank the Ministry of Finance and the Bank of Jamaica for this kind invitation. So some of these notes look a bit more scary than the rosy picture that have been painted by earlier presenters, with the exception of Peter. The thing is that we're not there. So we are clear in terms of the future, in terms of inflation targeting. But what happens in between? And do we have the right solutions in place? August, September, December, January. What happens between now and 5 years' time? Will JPS, will your business navigate the space in sight of the progress that we are, logging on to? So I have some thoughts that might not necessarily be those of the JPS, so let me qualify that. So, a question for this audience, and I know us Jamaicans don't like to vote, but I'm going to ask us to vote on this occasion. So you have two lines there on this graph. One represents company A, one represents company B. So, there's no wrong answer. Those of us in this room who would like to be owners of company A, please raise your hand. Blue. Blue is company A. Those of us in this room who would like to be owners of company B, please raise your hands. Okay. So, there's a problem with volatility. Because both of those cash flows are equal. Both companies earn the same amount of profits over the time period, if you add up the numbers. So, when we say we should just lap up this sort of volatility in the short term in pursuit of this beautiful picture of inflation targeting, why did I not have a vote for company A? It's because something is wrong and we need to fix it. The reason for a business like JPS and most businesses is that banks price us in terms of interest based on the volatility of our performance. So, whilst our cash flows might be the same over the same period of time, the cost of which we borrow money, volatility comes into play. True? Right. So, let's deep dive into the real issue of volatility. I don't have to talk to this graph. Many presenters have spoken to it. But this is the issue we have is the level of volatility that is taking place with the currency. Yes, we anticipate that the currency has to be the shock absorber, but to what extent and over what period of time is acceptable? Are the persons who are complaining, are they dinosaurs that needs to change? Or is there something else that we should be looking at to be doing in the interim to help address this issue? So as I said before, as Jamaica moves towards an inflation targeting regime to deliver low, stable, and predictable inflation in the pursuit of better economic performance, a clear FX policy and intervention is needed to address some of these risks, in particular risk number one. As a country, I don't think we have any of number three going on, but certainly at points in time in my business, I have not been able to access the market and get foreign currency to convert. So we have to have those truths being spoken in clarity and address them. Now, we embarked, Dr. Constant, on a flight in midair, as far as I'm concerned. So we weren't all on the ground when the inflation targeted took place. Some of us was in mid-flight. And how do we address the fact that you have a swinging ball attached to a plane in the middle of the air? Right? The current margins, and I think the example was used, of PriceSmart, to the fact that it might purchase some goods at 100 to 1 and an inbuilt margin of, say, 20%. And by the time they go to repurchase, they repurchase at 130. What happens? Have the margin that they've sold at, or the markup, can that cover that level of volatility within 10 days, 15 days? That's not reasonable. For JPS, we have added issues. We are fully regulated, so hedging is not currently viewed by our regulator as a prudently incurred expense. That's something we intend to change. So there are issues with the plane being in mid-flight that we have to address in this road that we are embarking on. What needs fixing? And some of my presenters spoke to them early on. We have a not sufficiently developed financial and currency derivatives market. We think the role of the Bank of Jamaica is too limited. And Peter made a specific recommendation, which I am fully aligned to. The existence of cowboy premiums in the market. Early on this year, the JPS entered the market to do a forward for about $80 million US. And when we were shopping around, nobody could tell me the basis on which they were trying to price me. It was everybody's guess. The interest rate differential was something of the past. And we need to get this better. And I'm sure it wasn't my credit risk. We also have a lack of sophistication, because clearly, having done business a certain way in the past, there's, the level of sophistication isn't there. And forums like this, we need broader education amongst all participants. So, in my non-economic trained mind, I sought to look around to see what are other people doing. In Thailand, the Thai FX strategy, the Thai government, who is pursuing a similar inflation targeting regime, did a few things similar to what we are trying to do and a few things differently. One, they had a definitive FX strategy to deal with volatility. And the question is, what is considered too volatile? Is the 10%, 6%, is that volatility enough? I don't know. But I think what I'm hearing from my fellow corporates is that they think a movement between 131 and 138 in 15 days is too volatile. Okay? Especially with the lack of applicable financial instruments that they could readily go to that are not readily available with the level of sophistication that we have now. 2, to manage FX risk, the Bank of Thailand offered competitively priced hedging products, which is what I know the BOJ has an independence cry about. As well as stuff like what we're doing here now, number 4, I'll jump to, there was a massive collaboration between the Bank of Thailand and commercial banks in promoting the use of FX hedging instruments to educate the corporate sector, particularly small, medium enterprises and small enterprises. So, I have 2 broad recommendations as a way going forward. 1, a lot of my fellow speakers spoke to on the left, the need for comprehensive market development, be it forwards, futures, options, FX swaps, cross-currency swaps. We have to have that, and we have to have it fast. And I've seen in the presentation that the BOJ is thinking and moving as quickly as they can, but having implemented inflation targeting, we are hurting now. And on the right, and I think it's more important, integrating and enabling the people and participants in a defined FX hedging market. We need to train our people. We need to grow our skill sets. We need more corporate treasurers, and we need traditional accountants like myself to stop behaving like treasurers and ensure we are fully equipped to navigate this new space that we're all in. At JPS, we're clear that financial risk needs instruments. And sorry, something didn't come up on the slide here. And we're fully logged on into using instruments designed to manage these risks. And we are only kicking and screaming with our regulators to get it done very quickly. And lastly, the umbrella finally came up. I just share a quote with you, and it came from my daily word. Those are not necessarily my words here. It says, anyone can form a club or a clique. It takes grace, shared vision, and hard work to form a community. Our nation, Jamaica, needs to build communities in order to succeed. And this is part of building that community. Thank you very much.
Thanks again. I suspect we're having a mini war brewing between between Peter and Vernon. And I suspect a mini war is going on among the bankers and the ultimate end users. Larry?
Wow. Morning, everybody. You heard that word that he used? Treasurer. You know, big shot companies have treasurers. Small companies have accountants. A lady got up earlier, Miss Ina. Miss Ina, raise your hand. Ina Wang Sang. She over there. She run a distribution business. She buy locally. She buy internationally. She have more trucks than you can count that will roll out every morning at 7 o'clock. True, Miss Ines? And her worry is that when she land her goods at the wharf and them cost it at $135, she have 30 days credit. She don't sell the goods, she don't collect the money. When she have to pay that bill, the dollar gone to 137. And that's the worry. It's called foreign exchange losses. So when the dollar appreciates, you get a lick. When it depreciates, when it appreciates, you bid with gains. So that's how the curve and the fluctuations come into play. And that's where the hedging comes in and the forward buying. You know, I called one of my colleagues yesterday. He's in the flour business. He couldn't speak to me. He was speaking to his trader, his wheat trader, his corn trader. And I think that's what we're talking about, how we can get into that space. Some statistics were quoted earlier, and we have them. And I just want to set a foundation of large, medium, small, and micro. In March and April 2018, 18 forward contracts were done. The average of those contracts were 8.75 million. Now, to put that in perspective, that's 1.138 billion Jamaican dollars. That's the average of the 18 forward contracts. The period that Peter spoke to, September 2018 to June 2019, 84 contracts were done, both buying and selling. The average amount was 5 million US. That's $680 million Jamaican. In June this year, 909 million US dollars was traded in the market. There were 1,180 foreign exchange large transactions over $100,000, which represented 78% of all the money that was traded. So in the September period, 4% of the money traded was done on forwards. Now, you know, Governor Brian Winter, has been speaking and pleading since 2018 for the market to get into forward contracts because he sees the issues with the fluctuating exchange rate. He has indicated that it is a new way for financial institutions to make money. And this would be a business opportunity. But the truth be told, as has been said before by my friend from JPS, I don't even know if them know to figure out how to win or how to lose. That's maybe they can explain them. Take a gamble, Peter, take a gamble. And if you want a history of that, go back and read the articles on the Jamaican Oil Hedge. That was done, 4 years ago? When we hedged at the price to go up, but it never went up. I'm sure the decision at the time was taken intelligently. They got information from Bear Stearns and all these big shot millionaires in New York where the oil price was going, and it didn't. And that's in fact what Constant was speaking about earlier. And the Jamaica Chamber of Commerce tracks business and consumer confidence survey for the last 18 years. And the Bank of Jamaica speaks from a position of knowledge because they buy into that survey. So any of you financial institutions, you people who may be a little wayward and not understanding all the details, check with the President Lloyd Distance and he can sign you up. But we have found that in times that the rate is going up and there's a little nervousness in the market, the importance of our foreign exchange, both the price, the availability, and everything it raises. In fact, recently, it was close to crime as the most important, one of the most important things that our businesses were concerned about. And although we are experiencing unprecedented business and consumer confidence, there are challenges out there. Now remember those numbers I quoted before? About the 600 million per transaction. In Jamaica, you know, the MSME, the minister made a fantastic announcement yesterday at the Jamaica Chamber of Commerce procurement seminar that he's going to be allocating a certain amount of the procurement of Jamaican businesses, you know, for government. A micro business is $15 million or less in sales. A small is $75 million or less. A medium is, a small is 75. A medium is, whatever it is. And a large is 425, a typo. The point being that The point being that the $608 million is bigger than a large. So the smaller people are not participating in this area. So the question is, how do we communicate this? A little earlier, we're speaking about the inflation targeting, Trenchtown Rock. And I'll share with you, because the whole question, of the Bank of Jamaica team, the governor, concerned about his communication techniques. And I remember the day distinctly when Governor Winter said, Jesus, people read more cartoons than they read the ads. You remember, Senior Deputy Governor? And he charged this team to go out and find a better communication way. And they came up with that hit me with music thing that was aptly described. And I noticed that the Jamaica's Bankers Association, a key player was to be moderator, but we have the new president here, I believe. So give him a round of applause. And I hope he's logged on to the video that was done. Because I wanted us read a summarized version of the video that the co-chair of EPOC, the Jamaica Bankers Association, and the PSOJ came up with. Hey, Jamaica, are you listening? Turn your sound on and your volume up. We're going to change the way small businesses operate in Jamaica. We're going to make it easier to make business. For too long, it has been too hard. This is why it is a team effort. Hello, everybody. My name was David Newell, the president of Scotiabank and the president of the Jamaica's Bankers Association. On behalf of all banks in Jamaica, we are ready to take on the challenge of changing our mindset so that we can be more focused and invested in the growth and success of small, medium-sized businesses in Jamaica. The Jamaican economy is stronger than it has been in decades. We see the small and medium-sized enterprises of critical to the success of the Jamaican economy. We are signing on to change the ecosystem. And then co-chair Keith Duncan came on. He's a co-chair of EPOC, VP of PSOJ, and group CEO of the Love Company, JMMB. And Keith said, in collaboration with the PSOJ, EPOC, and the banks, and all stakeholders, has decided to facilitate growth of Jamaica through greater participation and getting them access to the funds needed. No more talking, as we say in Jamaica, action, not a bag of mouth. So I stand here today to call on you, sir, to mobilize your members, to really put in place these forward contracts. Because the truth is, we have been talking about it for decades and nothing has been done. So I appreciate this seminar. I appreciate this conference because we have to get it done. And it must be true because it was in the video. We want action, not a bag of mouth. Now, I've had the privilege of sitting on the Bank of Jamaica Foreign Exchange Committee for the last 2.5 years. And I've heard Governor Winter say over and over again, many, many times, him want forward contracts. Bankers go into it, go into it, go into it. It will help everybody. It will level the playing field. And up to now, it has been a big man's game. So, Governor Winter, he turns over the reins of the bank on August 16th. So that would be a good deadline to put in place for the Jamaica Bankers Association and all the banks to come up, to give him a going-away present, and to give Richard a nice entry into a more stabilized market. Because when I look on your websites, the speaker, my friend down there had said earlier, I see credit card loans, car loans, mortgage loans, personal lines of credit, business credit, but no forward market on the websites. Nothing to educate people. We don't have no treasurer. We have an accountant. Right? We're not big like these massive companies. So I'm challenging you. 3 weeks to let's get it going. Let's start the forward contracts and give Brian a going away present and give Richard an entry present. It has certainly been a pleasure for me to be here. It has been a pleasure to sit on the committee. And I know on behalf of the Jamaica Chamber of Commerce, I would just like to thank everybody, and particularly Governor Winter, to thank him publicly for his splendid service as governor of this institution. Thank you.
Thanks, Larry. Fortunately for me today, I'm just the moderator, so I can't help you today in this capacity. So we heard the speakers. We heard our first speaker, Sylvain, speak of, or Sylvian. So he speaks about the difficulty of planning, what is planning and what is lack of planning. He gave us some statistics around the fluctuation between plus or minus 8% to plus or minus 13%. And he indicated that the history of planning was based on profit, or the history of planning was based on the fact that you could speculate on currency and the profits would have been comparable to your company's operating profit. And so in the new paradigm, it is about fixing your operational margins and buying and selling US dollars specific to your business needs. He spoke about the existence of some amount of hedging. He referred to it as do-it-yourself, where people are buying US dollars in preparation for future purchases. And he went on to indicate that banks have no excuse, and I'll tell the bankers when I see them, that banks have no excuse as there is no restriction. It's a deregulated framework. He said the spot markets are liquid, interest rate market is liquid. Of course, we said deregulated framework, and there's the ability to shop around. We do not operate in an environment where businesses are restricted to doing currency transactions with their primary banks. And he indicated a number of risks inherent in the whole process. Credit risk, in some cases, collateral may be required, and he recommended price discovery. Peter, the banker, and it's good to see Ina Wong Sam. I know her, I've known her for a long time, and I'm happy to see her alive and well, and still in the business world. I mean, long before we heard about female business leaders and it became a popular thing, she was there doing her thing. So kudos to you. So Peter, he acknowledged the JBA and the GIF's effort around improving knowledge in the sector. He spoke about the global code of conduct and the certification involved, and he indicated that the code stipulates that the transactions should not be in the best interest of the bank, but in the best interest of the client. He indicated that there are exams and they're open to people, not necessarily people in the banking industry. And he spoke about products. He said that it's not new, it existed in the 80s, and he cited a number of challenges with the operation in the 80s. He also indicated the size of the market, and he indicated that there are some challenges in terms of unwillingness, the guarantee of supply, and companies need to plan how better to source FX. Banks need to plan how better to source FX for their clients. He left with a charge to the BOJ to become an active participant in the process of forward contracts and hedging. Vernon gave the perspective of a client, and of course, Larry spoke about a different set of clients, but Vernon spoke about the perspective of JPS, a huge user of FX, a very complicated organization, and I'm using Larry's words, forgive me. They have treasurers and complicated structure to manage their FX. And he indicated that while he is more or less supportive of the thrust towards focusing on inflation, there are challenges inherent in short-term volatility. And he gave a challenge to the audience, and fortunately or unfortunately, you voted the way he expected, and he wanted you to vote, so he could reinforce his point that companies will have challenges in volatility. He recommends a clear FX policy, and he indicated that policy should be implemented with the constituents involved in the process, so the users should be at the table, and his recommendations: need for comprehensive market development, integration of enablement in defining the FX hedge market, and he shared what is required: grace, shared vision, and hard work. And of course, Larry, who is fresh in our minds, indicated that banks and the sector, all involved, need to understand that there are nuances. Big companies may have different challenges and different ways of addressing those challenges. And I think, in essence, Larry is indicating that as we move forward and as we answer, he also acknowledged that the outgoing governor would have spoken and would have encouraged the banking sector to take this on during his tenure. And he's encouraging the bankers to respond as a parting gift to Governor Winter and as a welcoming gift to our new governor, Mr. Biles. But his key point is that in this whole effort, we should not leave the smaller businesses behind. I will now open the floor for questions.
Hi, Keith Collister. I guess I'll direct this to everybody except Larry, who I know well, on the panel. You've seen some large corporate, and it was kind of raised as well with the 80 million forward, US forward. You've seen some large corporates in Jamaica doing refinancings, and these are large, lumpy transactions. Some of them are done out of season. And that has had we've already established that there's a limited capacity. There's not really a two-way market in Jamaica, which I think most people probably intuitively knew anyway, in terms of forwards. That it's a very thin market, that it's really just an emerging market. If you have a large transaction of 100 million US, say, let's just use a number, and that drives up the exchange rate past the 6-8% range, wiping out profit margins for some small players. Does it not make sense for the Bank of Jamaica to seriously think about that exact solution that I think it was Vernon talked about with respect to actually taking a position and providing some of those forward contracts in the market at this time? Because it does seem to me that when I asked one of the major players here, they said, there's not going to be no forward. What will happen is that a player who, even if he offers a forward, he will actually just buy the foreign exchange in the market in advance to deliver at the end. So I guess I'm really directing this maybe at Sylvain. That isn't in the context we currently are, doesn't it make sense for us to adopt more of a Thailand-type strategy until we get to the nirvana of that future forward market, which is both two sides, which is not thin, which has transparent, which has real pricing, as opposed to cowboy pricing, and all of those good things. So, and I'm getting away from the argument. We in Jamaica we went through the overvalued currency. We don't believe in that anymore. Yes, we believe in markets, but we do have a market problem, and it particularly impacts small and medium-sized businesses. And so, I'm asking the question. I just had this conversation with a few other people. And so I'm just asking what your views are. Perhaps I'll ask for all three, but I'm particularly interested, obviously, in the Sylvain solutions. Thank you very much.
Thank you. The purest view when we are in a full-fledged inflation targeting mode is that we're focusing, we have one instrument, the policy rate, the rate for the overnight. So if the central bank goes into doing forwards, it will extend that policy rate, and it would not be typical. But the way the central bank addresses it, and I know the Bank of Jamaica does it that way as well, is that through market intelligence, they gather information about the coming flows, and they would know sooner or later about a large $80 million flow, and that would be part of their thinking when they are deciding to intervene or not, if they fear that the market will become disorderly in the spot market. And then it's for the bankers to bridge to the far date with their balance sheet. The intervening directly in the forward market would not be typical in the framework that the central bank has adopted. But it could be a short-term solution, but it would have longer-term consequences.
Anybody else?
Yes, I would. Okay, so the truth is one of the challenge we face now in terms of the forward market is, and I don't know if somebody can correct me if I'm wrong, but I think at this moment only 4 institutions are actually doing forward contracts. So we have some of the larger players that are actually not as yet involved in that space. The truth as well, if somebody were to come with 100 million, right now I don't think any one bank or dealer could take that on, given the current NOP limits, which is why I raised it as an issue earlier, because we are going to, or we might have to look at that. But I mean, I showed a solution earlier about BOJ looking at coming in to the forward space, because the truth is, I believe that if we really want to see some improvements right now, that BOJ might have to say, we're going to put 300 million. And I'm not saying 300 million is the figure, but you might have to say we're taking 300 million out of the NIR and we're going to put it in that space because we see the importance of what this can do to the country in general.
You're good. No? What's your number?
Keith, just to share that I concur with your thoughts, as you would have seen outlined in my presentation, that whilst not compromising any integrity issues with the Bank of Jamaica, but we have to anticipate that we're in a unique space and we can't move from left to right in one go. And certainly in the short term, I think the bank has to play a different role to address this issue. And I would advocate for that, and I'm actually advocating for that, as well as any initiative that could deepen the market quicker so that actually it doesn't require even my first suggestion. So those are my thoughts.
Thank you, gentlemen. And just to remind you about the Thailand example that was cited, so there was a defined strategy for volatility driven by the appetite. So the country would have established what is your appetite for volatility, and that was clearly defined. The central bank offered competitively priced hedges, and there was massive collaboration between the central bank and the commercial banks to deliver the solution.
Yes, good afternoon. My name is Earl Green. Forgive me if I seem to be rambling, but I'm trying to make this question as concise as possible. But in a nutshell, has any analytics been done to determine the critical mass necessary to let the forward market paradigm work in Jamaica? We have a tendency to take models from the first world into the third world, although we don't like that name, and hope that they will work the same way. But to me, I don't know in terms of the capital capacity, if not the population size. We want that to work, what we see work in the States and so, but as I pointed out to some people, Jamaica tends to buck the trend. So has any analytics been done as to what the critical mass of the capitalization of Jamaica are so necessary to make such a model work here, and what is that level?
I usually go in different countries, and Jamaica would be at the top end of the countries I'm going into. And foreign markets are traded in the lower tier markets. The challenge that we were talking about, the $80 million flow, will always exist. There will always be a trade too large for the capacity of the market. But we should not aim at being able to absorb those flows to start with. The flows of the smaller enterprises should be easy to absorb, the medium-sized enterprises as well, the large ones as well, but the extra large ones, we must not aim to be able to absorb them right away.
If I may add as well, I think what we're seeing now initially is as a lot of companies try to convert some of these large transactions, a lot of companies try to convert because of the success of the Jamaican story, of where we are now. We're seeing a lot of transactions that are what I would say one-off transactions. So I would say within a year or two, we just have to give it some time. I would say within a year or two, when some of these transactions disappear from the space, you will see what I would say a more normal or a more normally functioning forward market, because I think we are getting there. We are definitely seeing more transactions being done. But I think until we get rid of some of these transactions, some of these large infrastructure type loans that are being converted to US dollars, because of how good how low Jamaican dollar interest rates have gone, I think as soon as we get some of those transactions off the books, so to speak, we will be in a better space.
And those large transactions are a signal of the development of the capital market, so it's a good sign. It's creating turbulences on the way, but it's a very good sign about what's happening in the Jamaican economy.
Is there any indication of the level of debt, the debt stock that is in the market today that you're anticipating that will be converted from US to Jamaican in the short term, or over the 2-year period to which you referred?
No, I'm not sure, but what I think that you can look at is, for example, some of the mandate from the government and the quasi-government companies that they need to get on board in terms of converting back those into Jamaican dollar. I think if we take a look at that, we'll get a better idea of what the transaction sizes could be.
Okay, so I think the question is, I think your answer is suggesting that we have a number of lumpy transactions that will continue to influence the market, and I suspect a part of information being available to facilitate good planning and forward planning would be to have that information in terms of how much debt is there, when is it going to be converted, and the impact it could potentially have on the currency. Certainly, if it will drive volatility in the short term.
And the BOJ actually gets that data as part of their market intelligence. So I believe right now the BOJ is in a much, much better space. If you go back even further to 2018, if you go back to 2017 and 16, when a lot of these transactions would have been done, and it's not only government entity, we also have a lot of these lumpy transactions in the private sector as well. So we are seeing the amounts in terms of the absolute amount, not in terms of the volume, but we're seeing the amount of these transactions diminish. But the truth is the BOJ have a better fix now on what is happening in the FX space.
All right, thanks, Peter. So we're at time, but I am able to take one last question. I know it's very difficult. It says here lunch, which potentially many of us are looking forward to. But is there another question for our esteemed panel? Kwame?
Yeah. Surrounding the volatility in the FX market over the last 2 years, which would have been the main concern? I am a bit concerned that 2 years ago, we had several forums like these, smaller forums, in which information was given and discussions were had that, listen, if you have a low interest rate regime, it has certain spin-offs. And one of the spin-offs is that I will refinance my US debt. Whomever have US debt at a higher rate will now seek to refinance their US debt in Jamaican dollar at the lower interest rates. And that means that you have to buy US to pay off your US debt. So, to me, this is information that was out there in this space and should have been used and was mentioned in several forums that expect this to be coming, as well as the fact that information is supplied as to all the upcoming deals in the market. Every company raising money, all these deals go to the FSC. The FSC have the information. The BOJ can get access to the information. All the information is in the space to be used for planning. My concern is, why is it not used? Because there is no new information. There is nothing new that is causing the volatility. This is all information that the BOJ, the MOF can have access to, the FSC have access to, and that's just there in the marketplace. And the reality is our country is one where the behavior is coming from far. It's hard to change. People save in foreign currency. How do we change that? It means educating people. But sometimes, again, as bankers, as financial institutions, when we go out there and try to educate people, the market already sees us as the villain. In Parliament, bankers are painted as villains. So how can you even be advising people to do something when you are being seen as, you're only advising me to make your billions that you report? So the BOJ, the responsibility of the MOF as well, because they are responsible for the growth of the country, you must have an agenda to educate your people to understand that all the products that are out there is in your business interest. We can do factoring. If you sell your goods and you don't get money till 30 or 60 days time, you can take a loan as bridge financing. There are companies that will buy the receivables from you now, offer you the cash flow so that you can better plan your foreign exchange needs. All these services are there. The next thing is the regulation. So fine, The net open position caps the extent to which banks can take on these transactions. 8 billion Jamaican dollar, which is roughly what? About 65 million US, is the most any one entity can have. And that is capped based on the capital of the institution. So most banks can, the smaller banks can go up to 65 million. So if you have companies that need 65 million US, and you have it in deposits, which is most likely because people save in US, you can take it on your balance sheet to say, let me supply these clients to the US and over time I will cover this position. Because you're capped as a bank by the net open position. As a cambio, you can't go short as a cambio. So that removes the cambio industry from it altogether. So the question is, if we are planning a low interest rate regime, there are certain spin-offs from it. How do we plan properly for that? Does it mean that you have to give bigger net open positions to the banks? Does it mean that you have to take an allocation from the NIR and say, okay, this float will be used to supply these activities? You might sell to a big deal now, but there's a time of high season when you will buy back those funds from the market and you can build back your reserve again for a low season. Does it mean that supplying an 80 million need from the BOJ's perspective via a forward contract has less far-reaching impact on small businesses in the country? Because when the dollar moves from 125 to 138, it squeezes a lot of small business, and the impact of that is much higher than what it would have cost the central bank to intervene via the forward market.
Well, thank you very much, Kwame. I suspect you will be a panelist at the next, the next symposium. Thank you very much for your attentiveness. I will now invite.
I wanted to address some of the points that Kwame raised.
Oh, you want to address some points?
So,
well, just so you know, lunch is being served.
Right. So I think, Kwame, we may be a little confused, and I don't want to belittle the point, but I think we're confusing the depreciation with volatility. Actually, the Jamaican dollar has not been as volatile as we think it has. The volatility is very low. The depreciation also, if you look at
Canada.
If you look at Canada, in 2017, we're talking about a 16.7% depreciation. But as compared to Jamaica, I think prior to this year, we have been fairly flat. So I think we have to bring some context to it when we say it might look, because you're talking about from $5, it moved by $5, but is that really a significant depreciation? Is that really volatile?
Or is it dependent on who is answering your question?
Well, move from one.
Well, I'm just kind of standing in for Larry and his indication around, and Vernon around the impact it has in the short term on their business. So I suspect at our next symposium we'll be able to go through, and I suspect we will also have continued dialogue on these issues to the extent that we'll arrive at a sufficient solution. I'll now invite.
Maybe to add one thing.
Oh,
there were 5 or 4 occasions in the last year where the buyers of dollars could have bought dollar at 131 or less, with the different waves that occurred during the market. So that's where hedging will help. So you fix your margins when it reaches your level. You don't have to wait till the last day to buy your dollars. So there's, and the question on the point of volatility, it is a very low volatility environment that we are currently in Jamaica. A move of 10 cents in a year is nothing. $10 is nothing.
Okay, thanks again. One thing, Larry, you indicated that you could potentially have FX losses or FX gains. As a banker, I've never heard a client come to me to complain about having had a gain based on where they were in that cycle of volatility. I've always actually heard only when they have made losses. But Mr. John Robinson, I now invite you, sir, to give closing remarks. And I thank you, panel, for your presentations.
Thank you.
Thank you, Jerome. Ladies and gentlemen, about 6 weeks ago, we had a series of seminars on demystifying inflation. And the feedback we got was hugely encouraging. In fact, we're thinking of taking that show on the road and widening the audience. Today's topic seems to have been even more attractive and has, from the response that I've seen, is even more, even closer to the hearts of the financial sector and a broad cross-section of all of you who have joined us today. So I want to first thank the initiative of the Minister of Finance and the Ministry, who are the organizers of this seminar, and to you for having come and participated. The initiative shown by Minister Clark has sent a very strong signal to the financial sector that the government is serious about efficiency and transparency in the financial markets. I want to thank the presenters and the facilitators for taking the time to impart their expertise on the featured topics. These persons were carefully selected to give you, the attendees, a wide cross-section of views and perspectives. So I'm sure you'll agree with me that the presentations were handled adeptly, and we leave here with a better understanding of the foreign exchange market and the role of the central bank in that space. The main event was the presentation and the discussion of hedging products. And of course, the main takeaway here is that these products are not novel. They exist in all financial markets across the world, and we have had our fair share of experience with them. They are still not reaching the small and medium-sized businesses, as was pointed out. But for them to enjoy a wider usage, they have to be driven by the efforts of the intermediaries who advise their clients, and for the earners and the users to approach their bankers to ensure that whatever benefits can be had by participating in these contracts, that they pursue them. Companies who earn or require foreign exchange as an important part of their business should now realize by now that there are huge benefits, losses, gains to be had from having proper planning horizons. So there have been suggestions made along the way that the Bank of Jamaica could play a larger role in this interim process between the introduction of products to prime the pump of engaging in forward contracts. But as Tafai pointed out, we have a well-defined role to play in the foreign exchange market. We will continue to engage the users, the intermediaries, and all the interested parties regularly to get their feedback, to get their ideas, and to give them fair warning of what is the policy direction being followed. So I think the feedback from both by the presenters and from the audience has been very useful, and we will continue to take these into account as we build out the infrastructure for the FX market. The next big thing is the development of a foreign exchange trading platform by BOJ, which will enable the kind of transparency that which everyone seems to have agreed is lacking. It will have the facility for forward contracts, and it will have the kind of information flow that will remove a lot of the uncertainty that drives the kind of price movements that we see today. So, in closing, on behalf of the Ministry of Finance, I express appreciation to the staff of the BOJ who were involved in the organization of this symposium, and thank you for your attention and your participation, and we hope to see you again at another of these symposia. Thank you.